Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is the world's largest beverage company a good investment? In this video we will be analyzing if Pepsi stock is a buy. Could Pepsi, stock ticker symbol PEP, be primed for outsized returns? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Pepsi. Pepsi was founded in 1893, with the creation of Brad's drink by pharmacist Caleb Bradham in New Bern, North Carolina. The company officially incorporated as Pepsi Cola in 1902 and continued its rapid growth. More than just soda, Pepsi portfolio contains many strong brands such as Gatorade, Lipton Teas, Frito-Lay chips, and Quaker Oats. Today, Pepsi is headquartered in Purchase, New York and employs over 260,000 people worldwide. Now let's look at the price action. Starting with the 1-year chart, we see that Pepsi had a CAGR of about -6%. Zooming out to the 5-year chart, we see that Pepsi had a CAGR of 7%. Long term, Pepsi has been a steady grower, but the recent pullback may be an opportunity for investors. If we perform a backtest comparison of investing $10,000 in Pepsi versus the S&P 500, we find some interesting results for Pepsi. In that comparison with the S&P 500, $10,000 invested in Pepsi would have grown to $18,384 or a 12% CAGR versus $22,796 or a 17% CAGR if invested in the S&P 500. This demonstrates underperformance for Pepsi. A Pepsi investment would have been less volatile with a 16% standard deviation versus 18% for the S&P 500. Pepsi outperformed the S&P 500 in terms of the best year performance, for which Pepsi grew 27% versus S&P 500 31%, and worst year performance where Pepsi fell only 3% versus the S&P 500 18% fall. In terms of max drawdown, Pepsi fell just 15%, less than the max drawdown of 24% for the S&P 500. Pepsi did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio despite have much lower volatility. Now let's hop over to market share and take a look at Pepsi's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under beverage and see that Pepsi is categorized as a non-alcoholic beverage company. Expanding the non-alcoholic beverage tab, we can see that Pepsi has the largest market share and actually appears to be growing. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Pepsi, PEP, and see that the market share is a massive 9.61% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Nearly 10 cents of every dollar spent to eat goes to Pepsi. This is massive market share. The 5-year market share CAGR for Pepsi is 0.78%. This means that Pepsi's market share has actually been growing, albeit very slowly, despite its market dominance. If we start in 2019, we see that the market share was 9.31%, 9.82% in 2020, 9.51% in 2021, 9.38% in 2022, and rose to 9.61% over the trailing 12 months. From this, it is really clear that Pepsi is a very strong company. In this version of market share, we can also compare Pepsi with other companies or entire industries. When we type in beverage, we can compare the market share data for Pepsi among the entire beverage industry. Pepsi holds an amazingly dominant 25% share of beverage spend. To put that in perspective, 25 cents of every dollar spent to drink a beverage goes to Pepsi. Furthermore, Pepsi is still taking market share from other beverage makers. Whoa, just phenomenal performance. Let's take a look at the fundamentals to learn more. Gross margin is 54%. This is beautiful. Revenue has compounded at around 8% over the past 5 years and has reached over $91.5 billion most recently. Pepsi is clearly a big player in this space. Looking at cash flow, we see a 9% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 7% CAGR. As a result, free cash flow has grown at a 10% CAGR. This is exactly what we want to see. Good operating cash flow growth with moderate capex spend yields strong free cash flow growth. Weighted average shares outstanding have fallen over the last 5 years, going from 1.41 billion shares in 2019 to 1.38 billion shares most recently. Pepsi has been buying back a lot of shares. I love their commitments to share buybacks, and it is a big reason why so many investors love the company. Now let's view return on invested capital. Return on invested capital has risen just slightly from 12.5% in 2019 to 12.9% in 2023. Would love to see more improvement in efficiency, but at least it is moving in the right direction. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -19 days in 2019 to -18 days most recently, Pepsi has gotten a little less efficient over time. However, the value is still deeply negative, which is deeply good. Now, let's look at Pepsi's debt. The net debt to EBITDA has increased over the past 5 years, going from 2.1 in 2019 to 2.3 most recently. While this debt level is not high, I prefer no debt in most situations. However, this value is trending downwards, so it is moving in the right direction. Last, let's explore dividends. Current dividend yield is 2.9% with a dividend payout ratio of 75%. This is a hit higher dividend payout ratio than I would like. This indicates that the company's dividend practice may run into trouble if core areas of the business underperform. Dividends per share for this company have grown at a 6.8% dividend per share CAGR over the past 5 years. The rate of dividend growth actually seems to be accelerating. The fundamentals of Pepsi are great. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Pepsi. It is a beverage company with a gross margin of 54%. The 5-year revenue per share CAGR is 8% and the 5-year free cash flow per share CAGR is 10%. This is great. I love the high margin with good revenue growth and strong free cash flow growth. A return on invested capital of 13% is okay, but it is growing. Next, the cash conversion cycle of -18 days is great. Concerning debt, a net debt to EBITDA of 2.3 means that it would take Pepsi a little more than 2.5 years of earnings to pay back their debt. So from a fundamental standpoint, Pepsi looks really good. Now let's switch our attention over to valuation. Pepsi is fairly valued relative to the S&P 500 with a ratio of 1. The price to earnings growth, or PEG ratio, is 3.8, indicating that Pepsi is overvalued relative to their projected earnings growth. Pepsi has been such a great, steady dividend payer for many years that I think people forget how great the company is. They have the largest market share of any beverage company and it is still growing and innovating. Recently announced are 2 new summer barbecue related flavors, Pepsi Lime and Pepsi Peach. When it comes to barbecue, the right beverage can truly elevate the experience. Pepsi, with its complex flavor profile, is a perfect counterpoint to the smoky, rich barbecue dishes that have been such a staple of my culinary journey. Flay said in a statement, "Whether you're enjoying fall-off-the-bone ribs, juicy burgers or perfectly smoked brisket, Pepsi makes each bite pop for a truly memorable meal." I will be curious to see how this affects the bottom line by the end of the year, but it does sound interesting and is generating buzz for the company. In my humble opinion, Pepsi continues to be a strong company. The recent share price pullback really looks like an opportunity to get a huge market share but steadily growing company with little volatility. For me, Pepsi for sure is going on the watch list. Many thanks for watching. What do you think about Pepsi, and please be sure to let me know what other companies you want me to analyze. Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.